Today we are diving into one of the hottest corners of the market, which is cybersecurity. You're hearing of AI solutions springing up, agentic AI, data centers. You are hearing of infrastructure, all kinds of conversations around AI, builder, hyperscalers. Don't leave out the importance of cybersecurity. For every business, every company that has an annual budget, even if they don't have a budget for anything, they always carve a niche for cybersecurity. Cybersecurity is a core element of the AI build-out. So we're going to break down 3 of the hottest names in the AI build-out. And then I'm going to talk about 2 ETFs that has a basket collection of several cybersecurity companies you might want to invest in. Quick but important reminder before we start: everything in this video is for educational purposes only. It is not a financial advice, and I'm not telling you to buy or sell anything. All right, let's get into it. So why cybersecurity and why now? The threats are not slowing down, they are multiplying. You hear stories of how agentic AI solutions are running scams and they are hacking people's companies. This is like the second time or third time I'm going to be hearing that deploy an AI agent to look for vulnerabilities and ended up hacking another organization in a different state, in a different location. And that makes security one of the very few tech budgets that companies just cannot cut. If you build a career in cybersecurity, you are made for life. They will always need a cybersecurity consultant, security architect. Yeah, there's no business that wants to be vulnerable to bad guys. So in fact, UBS projects cybersecurity spending grows about 13% this year to roughly $240 billion. So let's look at some of these AI stocks that, cybersecurity stocks that are pivotal to the AI growth. AI is a tailwind and not a threat. So this is the key insight a lot of people are getting wrong. AI is a tailwind, is not a threat. AI first exploded a couple of years back. Everybody was scared that it would make cybersecurity companies obsolete. The exact opposite is happening. Think about it in 3 parts. First, attackers now use AI too, which means they can launch more attacks faster and cheaper. That creates urgency and more spending on defense. Secondly, the defenders sell AI right back, building AI-driven detection products they can charge more money for. And thirdly, there's a framing you want to put into perspective. So remember this: companies are best thought of as defense software, not ordinary enterprise IT. So yeah, so these are the perceptions, right? Perceptions of AI and its the risk exposure that AI infrastructure are susceptible to. So defense is the category that gets funded first in any business. And when you look at where the IT dollars are actually flowing right now, it's 3 places: cybersecurity, hardware, and AI usage or tokens. Almost everything else is getting pushed aside. So people want to secure existing environment and future environments. So let's start with Fortinet with ticker symbol FTNT. In its most recent quarter, revenue came in around $1.9 billion and adjusted earnings of 82 cents. Absolutely crushed the 62 cents Wall Street expected. The stock jumped about 20% after. So this is a bull case for Fortinet. Fortinet is a firewall powerhouse and demand for its FortiGate boxes is strong. Now, including AI data centers and industrial sites, that is the much needed tailwind for its future growth. Number 2, this is an underrated It's an underrated company. They design their own custom security chips, their own ASICs, which gives them an efficiency edge competitors can not easily copy. So that's a real moat there. And thirdly, they are leaning into AI with 40 OS, 40 AI. Some of these are software AI agents that they are using to manage, enhance security of their workloads. So the stock is up about 36% this year. So things to watch with this stock is not cheap. It has a PE ratio around 44, and their next report lands tomorrow, July 29th. So let's be on the lookout for their earnings report. The second stock, cybersecurity stock I'm going to talk about is CrowdStrike. This is the momentum darling of the group. Their annual recurring revenue hit $5.5 billion, up 24%, with revenue growing 26%. And this is why people love it. One of the reasons why people love it is because of the Falcon platform flywheel. It has land and expand flywheel. They had a land and expand model with one model, and it keeps adding more. So they posted record net ARR of $250 million in the first quarter. The AI story is real. There are new AI detection products. So the ARR grow over 250% in a single quarter. So they raised their full year guidance, and they generate serious cash. It has a record $468 million in free cash flow, and they just did a 4-for-1 stock split to make shares more accessible. Yeah, so this is a good time to buy. It's around $183 as of the time of recording this video. So from $205 to $183. This is the time to get an entry if you are considering somewhere to diversify your money. There's also Palo Alto Networks. So this scaled up leader of the entire sector has a revenue that hit $3 billion in the quarter, is up 31%. Their next gen security ARR is $8.1 billion, growing 60%, and their backlog of committed business is $18.4 billion. So the bull case is the fact that they are the biggest, most complete platform in cybersecurity. Number two, they are growing through what they call platformization plus huge acquisitions. So they bought CyberArk for $25 billion. They rebranded Idira. They rebranded CyberArk as Idira, and they picked up Chronosphere, and those deals are integrating 3 to 6 months ahead of schedule. So customers are coming to them specifically to secure their AI rollouts. Another tailwind bull case for Palo Alto is the fact that it's a cash machine with adjusted free cash flow of $910 million, which is up 50%. So the watch out here is that the acquisition and stock composition pushed them to a net loss on paper. So yeah, of course, if you're spending this much, it's for the future. So if you're investing now, you are pricing in the future growth. All right, so don't expect a rapid increase in 2 months. They are spending money, so you're going to begin to see returns on that money maybe by the next fiscal year or 2 years from now. So this is where you want to compound investment over a period of time. So if you are not aggressive, if you are not a crazy risk taker like some of us, you might want to play it safe with the ETF. So these two ETFs are cybersecurity related ETFs. There's Bug and there's Cyber. So Bug has 30 holdings, growth tilted leans towards emerging higher growth cyber names. It's more concentrated with bigger single stock swings. There's a high risk, high potential reward. Expense ratio is lower. So if you are investing in ETF, everybody's shouting ETF. If you're investing in ETF, one of the things you want to check out is the expense ratio. Some ETFs have expense ratio of $5. $3, $4. Man, that means for every 10,000 shares you have, you pay. Just look at the percentage of the servicing fee. So expense rate is like a servicing fee that you pay for that ETF. For cyber, expense ratio is 0.6% with $11 billion in assets. The sector is a heavyweight. Cyber has the largest, most diversified cyber ETF. So if you don't want to pick just one stock, you can invest in the corresponding ETFs. I think I might go for cyber, yeah, because it has a larger collection and it has $11 billion in assets. If you compare that with a bug with $1.2 billion in assets. All right. So let's put the whole line of cyber aside. Fortinet is the firewall and custom chip modes. Revenue 1.9 billion, up 36% this year, but a premium valuation. Then there's CrowdStrike, which is AI security platform. AI annual run rate $5.5 billion, which is fresh off a stock split, but very richly valued. Then there's Palo Alto, with the scaled platform leader, growing 31% through all its even though it's carrying those expenses in paper as a loss. Remember, they are gonna expect the growth to go through next couple of months, next couple of years before you start seeing value in what they are investing in and their acquisitions. Then there is the ETF, the bug, and the cyber. So this provide diversified lower risk exposure to multiple cybersecurity plays. So if you are looking for alternatives to those core cybersecurity stocks, then you can check them out. This is a good time to get an entry into these stocks and then just watch them grow over time. Now, this is not a financial advice. Make sure you do your due diligence, do your frisk before you make a decision. See you on the next one.